Imagine this. You're a bookkeeper managing payroll for a small business. It's payday and the employees are ready to receive their wages, but you suddenly realize the payroll taxes weren't calculated properly. Just one small mistake could trigger IRS penalties, late fees, and lost trust from your client. Sounds intense, right? That's exactly why every bookkeeper, whether you're new or experienced, must understand the basics of payroll tax in the US. In this video, we'll break it down in the simplest way possible with real-world examples and step-by-step logic you can actually use. Welcome to Accountutor, the global platform for bookkeepers and accountants. Today, we're covering payroll tax basics in the USA. We'll walk through what taxes you need to consider, how to manage them inside QuickBooks Online, and what forms are essential to stay compliant. Let's keep it simple. So first, what are payroll taxes? Payroll taxes are the taxes an employer is required to withhold from their employee's paycheck and also pay themselves as part of running payroll. These include federal income tax, which is based on the employee's W-4, Social Security and Medicare taxes, collectively called FICA, or FUTA, which is paid by the employer, and in many cases, state and local payroll taxes, which vary depending on your client's location. Let's make this real with a quick example. Say you're doing payroll for Sarah's Bakery, a small business based in New York with 5 employees. You're using QuickBooks Payroll to run payroll bi-weekly. As the bookkeeper, your responsibilities go beyond just clicking Run Payroll. You must ensure gross wages are correctly calculated, all required taxes are withheld, employer taxes are recorded, and the correct filings are made to both the IRS and state agencies. So, here's a step-by-step breakdown. First step is you begin by collecting the W-4 and I-9 forms from each employee. These determine how much federal income tax to withhold. Second step is you run payroll inside QuickBooks. The software automatically calculates federal income tax, Social Security, Medicare, and any applicable state taxes. Third step is you ensure that all employee taxes are withheld and that the employer's portion, like their share of FICA and FUTA, is also recorded properly. Fourth step is filing. You'll need to file Form 941 quarterly to report income tax, Social Security, and Medicare. Form 940 is filed annually for FUTA. At the end of the year, you'll also prepare W-2s for employees and a W-3 for the Social Security Administration. Fifth step is don't forget the deposits. These taxes must be paid on time, either semi-weekly or monthly depending on the size of the business's payroll. Now here are a few tips every bookkeeper should keep in mind. Always double-check QuickBooks payroll settings. Make sure the tax rates and employee data are up to date. Clearly separate payroll liabilities from regular business expenses in your chart of accounts. Learn the specific state rules. For example, California has additional taxes like SDI and ETT. Stay on top of filing deadlines and use QuickBooks Payroll Center to file and pay taxes directly. It saves time and reduces errors. Payroll taxes can feel overwhelming at first, but with the right process, it becomes a manageable, repeatable task. And when you get it right, you're not just running payroll, you're protecting your client's business. Want to become even more confident in handling payroll and real-world bookkeeping? Start with Accountutor, where you'll find in-depth courses, practical demos, real-life examples, and expert guidance tailored for global bookkeepers. Learn accounting and bookkeeping courses that actually prepare you for the real world.